Welcome, everybody. It's about 6 o'clock, so we're gonna allow a few minutes for some to come in and join us that are joining online. But I just wanted to say thank you again for being here. It's so important for you to be a part of the educational aspect that we offer through KS, and I feel like I learn something every single time we have one of these educational seminars, and I know every one of you does as well. This one's really important, focusing on budgets and finances. It's definitely at the highest level, I think, for a lot of our community managers to have board members participate in this seminar, to learn more about it, to really take that deep dive. And we have experts here, not just Chris, who's a part of our CAM team and hello, Chris, has many years of experience and understands the ins and outs of the finances for associations. We also have Nick. Nick is here from I want to say Patrick Financial. I know that's wrong. Yes. And so he has, he's a CPA. He is our CPA, so he does a lot of the finances for us, and he can give you a deep dive into what it's like to look at the financials for your association, what it's like to handle the nuances of budgeting. What are some of the big items that really stand out? So you have the best of the best, both Chris and Nick here. And my name is Natalie McDonald. I'm the marketing manager here. Hello, many of us are familiar. It's nice to see you again. Jessica is a community manager, and Nico, both of them are here to support answering questions online, checking people in. If you have any questions throughout this, feel free to ask them. Sometimes if they're doing a little bit of a deep dive, you might want to give them a few moments to get through a bigger topic, but if they can answer that question for you in real time, they will. Everyone that's online, Nico will be addressing your questions. If we don't know the answer, we will get that back to you. And lastly, these are always recorded. So after this, we're going to send you a recording. You can share it with your other board members if they were not able to be in attendance today. We will have the meeting notes and also be transcribed. So without further ado, the two of you are up. We've got an excellent PowerPoint presentation that they put together for you. So let's get started.
So our goal today is to accomplish, I would say, three main things. The first is to be able to allow you to figure out, as a board member, where do I go to look to obtain financial information for my community, to then know when I'm actually finding the information, what am I even looking at, and how do I, understand the content that's there. And then the third point is, once I have my financial acumen, I understand my community, how do I use that information to properly plan for future budgets? Those are our three tasks. And obviously, we're also going to build off of you guys. Today is going to be a little bit of an interactive training. So we're going to bounce things back off of you. If you're introverted, you don't have to raise your hand, but I am going to ask you questions. So bear with us. So to start off, you learned a little bit about us. I like to learn about who's in our audience. So I would like to see, of the residents here, I'm assuming you're all board members. So how many of you are a treasurer? Raise a hand. If you're online, you can type it in the chat.
You got hands being raised.
Red hands. You can also just chime in if you want to say it online. So the treasurers, how many of you have been a treasurer for more than 2 years? Okay, we got two, and maybe some online. All right. How many of you are board presidents? Okay. Those are typically the two I would expect to see here. How many secretaries? Okay. And then how many of you are just a normal director, or, depending on your other terms, just a, okay.
We have the full spread today.
We got the full spread.
You didn't ask how many have been multiples.
You get a lot of handling.
How many of you feel like you do the same or all of them at one time?
You've done the full circle.
Yeah.
So the board members who have been here for 5+ years, I commend you. It is a thankless job, but the fact that you're here is amazing because you're constantly trying to learn and improve yourself, and that, in my opinion, warrants an applaud, because there's so many board members who want to, they get because they raise their hand, they're on the board, but they don't know what they're doing, and they don't take the time to learn and improve and be able to do their role effectively. So to start off, for jump too far. Obviously, we've got Nick and I.
Yeah, so my name is Nick Massa. I will correct Natalie on one thing. I'm finishing my last CPA exam this summer. So I have a master's in tax from Eastern Michigan University. I've been with the firm for 10 years. ATS, we're a full service CPA firm, handle between all of our offices, probably about 10 to 12,000 individual tax clients. Do small business as well, estate trust, all that good stuff. But my office and me in particular, we have a special relationship with Natalie and Jeremy and the folks over at KS that's been going on probably about 6 years now. And our role as it relates to all this stuff is every time that you as board members, treasurers, presidents, anytime you guys see a monthly financial statement that comes through you, that financial statement has not only passed through the accounting team, your community manager, it's also passed through our eyes. Okay. So we don't necessarily see straight source documents and different invoices and things like that. We're checking everything against the bank statements, right? Making sure, do these financials make sense? Okay. So what I like to get out of this, the last time we did this as well, is for you guys, when you all are reviewing your financials, what are the questions that you have? Okay. What are the questions that you have to show other board members or residents? What questions do they pose to you as the treasurer or the president of why are things categorized this way? Why is this on our income statement? That helps us as reviewers when we're going through to pinpoint certain things. Okay. And we'll kind of go over as we get deep into, into our deep dive of the things that us as accountants look for, especially kind of being, this third party reviewer, okay, if you will, of the things that we look for when we're reviewing those financials. Okay.
And Nick is in here every month and he sits down and goes through with our team. So I think that's a big advantage too for KS, that we are that hands-on, that we're actually diving in and looking at those financials. And then you have the transparency on the portal as well, that you can see all of those too.
Also, for my treasurers real quick, your 2024 tax returns, and also for those that are virtually, those are set to be delivered to you here in the next probably 2 weeks. And I have good news. We no longer have to mail those in. We can electronically file those as of this year,
Nice.
Which saves a lot of certified mailing for everyone. Okay. The hassle of did it actually get there, because we know how the postal services, as a reason. Okay. So just a quick little housekeeping update from us. Okay. All right. I don't think every association is currently having us do their taxes. Right. For the ones that do, those will be coming here in the next couple of weeks. Okay.
Thanks for the update.
So for me, I have my PCAM designation, which we is the other gentleman in our office who also has it. So we are 2 of 11 managers in the state of Michigan. I believe that's where we're at now, who have that level of designation, which to simplify, it's like your doctorate in community management. So it's pretty amazing that, that large of a percentage of the overall here at KS. I've been doing this for about 22 years. And in that time, I have a lot of board members who have come to me, whether they were self-managed or they are with a different client, something like that, and they're looking at making a change. When they want to get into management because they're tired of self-management. But one of the questions they always ask me is, what do I ask to find out what type of management should I get, right? And one of the top things I always tell them is ask what they mean that they're transparent. Because a lot of management companies says that they're transparent. But what does that truly mean? A lot of them, I feel like they are the gatekeeper of your information, and you have to come to them to get what information you want, right? They'll send you a financial package, a PDF, and that's the information you get, right? Here at KF, we're a little bit different because we feel like we're a partner with you, and we want to be able to provide you all the information because it's yours, right? And we want you to be able to have access to that whenever it's convenient for you. And one of the things I really like about our portal is it provides you that access, and at a level of, because I came from another management company, and comparing the two, it provides a whole other level of access, that's not always common in the industry. And what's really great is you not only have access to the same level of information as, let's say, a co-owner does, but it also gives you another level that you can actually go in and view the type of information that basically what we can see for the most part. And it's live, it's real time. So the numbers you're going to see on the portal are as we have them, basically. So there's a couple different points that I want to point out on the portal so that we can check off the tick of where you go to look, right? So in the portal, the first section to note is you as board members have access to more than co-owners do, all right? So if you're trying to direct a co-owner where to find stuff on the portal, understand you can see more than they can. And it's for a good reason, because there's some access of information like, delinquencies or legal aspect stuff that you can't share. So there's good reasons why you have that privileged information. But in the document section, you're going to have the bank statements, financials. Now there's two sets of financials. There's the full packet and then a co-owner version that just has like a balance sheet and income statement. Because a lot of residents want to be able to see that information, and we don't always want to have to I have to dissect and redact and all this other stuff.
The
Right?
package is like 75 pages.
Too many
long.
details.
Too much details, right?
Yeah.
So it automatically creates a co-owner version so they can see it. But as soon as it's available, it's on the portal and they can go on and see it. We're all about self-service. We don't have to be that gatekeeper, right? And there's also the actual invoices for all of the invoices are all there. Now, this is if you just, hey, I want to pull that information and see it. But our portal actually even takes it to the next level. Beyond that is you can go in there and see even more detail, right? So if you were to go under the board actions, there's a bunch of drop downs, one of them being invoices. And so this allows you to see all the invoices that are currently open or have been paid. And the little paper clip right there you'll see on the side, you can click on that and it'll actually pull up the actual invoice. You click, and I like the little eye. I always look at, you want to see more, right? And then you click on the little eye and you'll see the communications, when we received the invoice, all the details that are related to it. We're all about, again, transparency. You can see it.
You guys use that functionality in there? Do you ever go and look at the details of invoicing? Yes, yes, okay. Yeah, you're diligent. It's good information to have and to be able to monitor.
And so
You're an invoice approver.
Yeah.
Right.
Okay.
and there are like this gentleman signed on here, there are some boards who want to be able to approve certain invoices. And so they can be set up as that invoice approver. And whenever we do ours, and if we review it, we make our adjustments, we click approve, and he'll get an email saying, hey, there's an invoice in your queue to approve, and he can come in here and look at it. He'll be able to see the GL that it's assigned to, all the details, and can approve it. And you can attest, I'm assuming, the importance of making sure invoices are coded properly and the descriptions are present, so you know what you're approving, right?
And I would presume that if there's an issue that they're able to change the GL or request that the GL be changed to a certain category, right?
There've been
Yeah.
several cases, we just switched over to
Right.
class we have.
Yeah.
And sometimes it's just a matter of viewpoint. You might classify this in one category versus something else, but sometimes it's the way we budget, and we want to make sure that the expense lines up with where the money is.
Yeah,
And so I've contacted you,
it's incredibly important for your budget, right? Because otherwise you're looking at financials that really don't match the picture of the expenses you had in the prior year. It's also important too, because if that GL has to be changed later, and we find it the next month or the month after, then we're having to either reopen that closed period and give you secondary financials, which now we have multiple sets of financials out there, which we don't really ever like to do. Because then you may have someone that doesn't see the updated set, and you're both looking at different things. Or we have to make an adjustment in the month that that error is discovered. And then you have, like what we'll see sometimes is a negative expense, right? To reclassify something from a prior month. So ensuring that that GL is accurate as early as from the board and the accounting team's point of view is very critically important by the time it gets to us.
It also helps if it's a situation where it really is, has to be charged back to the owner.
Correct.
Because the work is not really,
Correct.
doesn't fall under the
Yeah.
the scope of
Yeah.
coverage under the association.
Yeah. And
So
then,
it's a good time to catch it.
yeah, and that's one of the biggest things, like when we're reviewing that I always question, I'm like, there's a lot of negative expenses, but as long as there's a reasonable explanation, I can tie it to another period of when that, when they cancel out, then I'm good, right? Otherwise, I don't like seeing those negative expenses unless we're able to tie it to like that, right? So.
That's a good reason why I'm always about pay it forward. If you spend the time to code things right, pay things right, you don't have to fix it. Right. And obviously there's times where some, people are feeling saying they just have to be corrected, right? But for the most part, our managers are reviewing this, if you've got work crew, they're reviewing it, our accounting team's reviewing it, and then obviously next team's reviewing it. So all these eyes, it just gives you that extra level of, follow through and thoroughness in there. Now, in the bank accounts, and this is one of those things that I was playing around with and thought it blew my mind that there was this level. So when you click on the bank accounts, you can see all your accounts, you'll see what the balances are. But then again, that lovely eyeball, when you click on it, it actually gives you the whole breakdown of everything in that period of time that's on that bank account. So you can see all of the income expenses. For the expenses, there's a little pay click. You can click on it and you can see the invoice that's related to that paper. It's all there. My mind was like, this is amazing. So again, if you start playing around with this, you'll start seeing, wow, there's a lot here. And you don't necessarily have to ask your manager, where did this come from? Because it's all at your finger. We don't mind getting the question. But if you're, one of those Excel spreadsheet gurus up at like midnight, probably not going to answer your question at midnight, but you can get that answer, right?
Treasurers
No.
sometimes.
No. Can I ask us a question? Somebody else may have this question. When it has the balance there, okay, is that balance live feeding in? Like, is this connected live to the actual bank accounts themselves? Or is that balance having to be manually updated by one of the, okay, once a month, okay. I wasn't sure. Sometimes I wasn't sure if Vantatca had like a live update feature where you were linking the bank accounts and it would, you could update it to have the most accurate balance. Okay.
So we do have the bank account tied, and they're doing, audits on those through our positive pay and all those other features that we have. The problem is, again, we're cash basis.
Yeah.
So a check may have been cut, but it hasn't been cashed yet. So it's not necessarily a reflection of what's totally out there.
Right.
But I mean, it's still alive as we have it kind of thing, and reconciled on the monthly basis.
Good.
All right. Now, the next part, which if you are a data person, you'll love this, is the report section. Now, I'm gonna precursor this, is that depending on your board position, you'll have different reports available to you. And what I mean by that is the board president and the treasurer have a few more like financial reports that are available to you that the average board member is probably not gonna ever look into. So if you're sitting down there with someone like, oh, you have more, it's probably for that factor. But in here, you can see modifications, violation reports, and then a bunch of financial reports that are in here for you. And again, the amazing part of this is you can click the PDF and get the same that you get in your email too, but if you click the view one, it becomes interactive. So you can actually set the parameters that you want to search for, and you'll see when we get ahead of here, you can actually click on some of them and pull up additional information, and there's a lot that's there. So the ones that typically you'll see in your financial reports are going to be the balance sheet, 2 columns, the income statement, 2 columns. So if you really want to see something that matches up, those are the reports that you're going to pull. And then if you want an extra level of detail of breakdown, the trial balance report is what you're going to look for. So those are gonna be the most three common ones that you're gonna be pulling to find information. There's a lot of other ones that you can see that are on here. So if you really want to go crazy, you can. But those are gonna be your big ticket ones you're gonna be looking for. Now, let's say you now know how to find it. So check box 1, right? Score for that. Any questions on where to find that stuff? Okay. So
Have you guys ever had difficulty finding a report that you've been looking for inside of the system?
Well, I mean, once you get oriented, you see how it's.
Sure. Okay. Good.
That's great. Vantatca is doing its job too, and we're here to, if you have questions, to dive a little bit deeper or that's why the seminar's here to really help.
all right. So we've got the easy one, the checkbox 1 done. All right, checkbox 2 is once you find information, how do we read it? What are you even looking at? What are you looking for when you're looking, right? So the 2 primary items you're going to be looking at is the income statement and the balance sheet. Now on this income statement, you're going to see basically 3 categories. The first set here is going to be the current period, which covers the date range at the top of the report. So in this situation, through the month of June. So you'll be able to see the actual for each of the line items, what we budgeted for that, and then the variance, the difference between the budget and what was actually done. Now, the second grouping is going to be year to date. Now, obviously, in January, they're going to be matching, right? And then but as you go along, that's where the difference is going to come into play. And the third is the year to date, or the total annual budget. Those are your 3 categories. And as you're looking at them, when we do our budgets, we try to disperse the expenses over the year of when they actually happen, right? So you put your snow expenses in the winter months, your landscaping expenses in the summer months. So it's spread out, but there are times where you get a bill that came before when you planned it or after, things of that nature. That's why you'll see sometimes variances that are different in the current period, but then they balance out in the year to date, right? So it's important to be able to know all of those categories when you're looking at them and understand what you're looking at. Now, I'm going to point out in the first section here, association fees. Now in this, and it might be a little bit hard for you guys here to see, but annually it says that there's about $159,000 actually collected. 159,000, but our budget is 120, I believe, 126,000. So we got a $33,000 variance. Now, because it's not in parentheses, that means we collected more than we budgeted for. As a question of the group, what do you think are some reasons for that there would be such a variance in the income?
People prepay.
Prepay, okay, that's a good one.
Maybe you've increased the fee since the time the budget was, set up. So now you're bringing in more each month.
It's a possibility, sure. Not as common, but a very much a possibility. Prepays is a good one.
Expenses might be coming later in the year. So that the budget is, you're going to have some extra to pay for later on. So
Potentially.
Like I can tell you, like when I see a variance like that, now, granted, I don't want to jump ahead, you have added assessments right below that as well. What I would look to is to make sure that we don't have any of our additional assessments above and beyond your association fees that are being lumped into those association fees. Okay, just because that variance is, of course, I'm the math guy, but it's pretty large as a percentage compared to the dues that have been collected, right? You may have prepayments, or you may have, everyone paid, the cash, or the checks were cashed at the very end of the month for the following month, okay? And then maybe if we were looking at July's, we would see a negative variance, right? And those two would balance out. But based on that number being so large, that's where, in the way that we review these things, I would look to make sure that, we don't have added assessments or something else in there, right? So
So that would be like a miscategorization?
Correct.
Okay.
Correct. And then you would, I mean, you would really look to see that it would probably potentially have occurred in this period because we have such a large variance in that month in, you know, in particular, right? So,
And you'll see in the current period, there's a $23,000 variance in June, right? Now, a common one that can happen is legal accounts, right? You've got a bunch of accounts that are in legal that haven't paid for a long period of time, and then they make lump sum payments. So they've accrued those expenses in past years, and then they pay them all now because of cash basis, those income is going to show up this calendar year, right? So that's another one that can happen. And it can also happen with expenses as well, right? You know, and it's more towards the beginning of the year typically, but if you have work being done in January, December, and your contractor doesn't bill you until January, February, then it can show up in this calendar year. As a great example, I had one community that I personally managed. Their snow contractor did work all year long, and we budgeted it partially from last year and partially this year, but he didn't bill us until April. Even though I'm like, hey, I'm sure you want to get paid. Yeah, I'll get around to it. Well, then all of those 24 invoices showed up on this year and it shows us it's over budget. But so those are some reasons why you can see those variances, right? But what you want to do when you're reviewing these is look at the individual categories and look for larger variances. And I tell most board members, you want to look at the big picture. I mean, you can look at the, you know, copy and printing and say, okay, wow, we've got a $69 variance. Why is that? Like, you have a $252,000 budget and you're questioning a $69 variance on printing. I'm more than happy to look into it, but is that really that big of a difference when it could have been just a timing thing? Or, hey, we decided to print newsletters this month instead of, you know, later. Like, look at the big picture, look at the big variances. That's what I would suggest focusing on initially, right? And what's great about the reports on our portal is you can click on like that 159,000 on the if you click the view report, and it'll pull up a report that gives you the breakdown of what that consists of. So if you wanted to see what the $244 in printing costs, you could click on that and it'll give you a report that shows what all those expenses are.
And you said which one would we click? Not
Yep.
the one you have up, but you said something else, right?
So when you go into the portal
Okay.
and you click on the view option to make an interactive report,
Okay, that's what that
The
you
view
said,
option,
the view
yeah.
option. Okay, thank you.
you'll see this, but then it allows you to click on those and see additional information.
Okay.
And that's what we as managers do when we get our financial report, is I'll look through this, and it's a whole team, right? Our accounting team puts together the package, they review things on their level, they send it to us. Me as a manager, I'm looking through all those expenses to make sure, okay, are things categorized as they should be, right? Now, there's always the possibility that I approved a, you know, tree expense that should have been general ground or something like that. It's a matter of perspective, it can happen. But for the most part, I'm looking for those things that, hey, somehow inadvertently human error happened, I need to make those adjustments. So I'm looking through all those and all those big ticket items. When something looks like a big variance for me, I'm looking at the details, right? So I'm going to go through all of that, do my review assessment. Once everything's as it should be, I kick it off to this tool. And then he goes through and looks at his features.
and so the other thing I want to point out is notice, you know, not every single item on this income statement necessarily needs to have a budget associated with it, like your late fees, you know, your check charges, maintenance chargebacks, right? I mean, you hope that you don't ever have to charge a late fee, but we all know you have to, right? But how are you going to judge how to budget for late fees, right? Little things like that. So, but, you know, Chris hit the nail on the head, like, you know, think about materiality on some of these things, right? Now, if our office expenses, is that office expense that had that $69 variance, that was printing, right?
Yeah.
If printing was off by $3,000, okay, relative to your budgeted amount, for that type of expense, that's a significant deficiency that we got to figure out. Either is something miscategorized, why are we spending so much on printing, and then how do we change the budget moving forward to reflect that if it's something that you're expecting for. And later in this presentation, we're going to get into how to identify are the things that cause these variances one-time expenses that we don't really necessarily think we're going to incur in the future, or is this something that we need to start working into our budget for the following year?
A little more printing and color.
Printing a couple. Yes.
Right?
So like postage is the perfect one, right? I mean, it's a small expense, but when you're looking at these budgets, factor in that, I mean, stamps continue to go up, okay? So I mean, the amount of, like in our office, you know, we have the printout from stamps.com, the amount of 50-cent, you know, stamps we still have lying around that are printed. We got 2 of them lying every single time. Right? So the cost of those things go up, and we'll get into kind of inflation adjustments and all that good stuff here. So.
Now, the other thing that I want to point out is we do what's called fund accounting. That means that we break up our financials into different funds. You got your operating account and your reserve account. Who knows the difference between the two?
It's a serious question.
That's a serious question.
Well, our operating account is intended to cover anticipated expenses that the budget is based on. The reserve account is going to make things from repair, things like that, projects that, you know, commercial settings would be capital projects, not like maintenance.
Yes.
And large unexpected expense.
Yes. Now, obviously, there are legal requirements and stipulations of what can be reserves, and we could do a whole separate training on that. But in a nutshell, you guys have nailed it. You know, your operating is going to be day-to-day operation, you know, keeping the lights on, you know, that kind of thing, cutting the grass. And then the reserve are your capital large expenses. So we separate those out, and there's very specific reasons to do so, tax purposes and legal purposes. But just understand that there is 2 budgets that, and you'll have 2 basically.
There's 2 sets of
financials.
yeah, there's 2 income statements, right? And I think the biggest hurdle for me as someone who, you know, does a lot of small business and business tax returns and accounting was that on your guys' income statement, I like to think of your guys' income statement more like what we would call a statement of cash flow, right? Because included in your income statement are those transfers from your operating to your reserve, okay? So like for most of for my business clients, right? They have a savings account, they have a checking account, and they transfer money from their checking into their savings account, okay? We'll use savings as kind of that's what you guys had for your reserves. That's not an income statement item. It's not a tax, you know, it's not a taxable event, anything like that. However, for the cash basis type of accounting that we do with fund accounting for HOAs and other nonprofits, that becomes an important item for you guys to track as far as how much are you budgeting for those reserve contributions every single month, okay? It's another big thing that we look for is to make sure that the reserve contributions that are being expensed on your operating income statement tie out to the reserve income on your reserve income statement and make sure that those 2 numbers match, okay? And then obviously if you have those large expenses, roofs, you know, sidewalks, roads, things that come out of those reserve accounts, those will be expensed and recognized on your reserve income statement at the time that's paid. Yes.
We had a major problem a couple months ago. Somebody's water heater died. The house was unoccupied. So it kept leaking and it damaged 6 of the 8 units in the building. And apparently they had 2 inches of water in the building when the realtor went in there and showed the place. So it was really a horrible mess. Now, we've got upfront expenses, right, because we've got people that are remediation people. And we've got the people that are the ones that come in and inspect the house to make sure that there's no mold growing in it and all that water. And it'll be billed back to the co-owner because it was his fault that whole thing happened. But is it okay to take it from the reserve account? So we don't have that kind of extra money. We have no-
Right. Well, I mean, I would foresee it's gonna have to come from the reserve account for cash flow purposes, right? And then obviously when that co-owner reimburses the association, which again will be in a different month, we won't have that negative expense. There will be an explanation for it, like how you just gave. Then it will cancel out. So at the end of, assuming it all happens inside the same calendar year, if you were to look at your year-to-date completed annual income statement for your reserve account, it would be, for that particular situation, it would be zero, right? Because you would be, the association would be reimbursed fully for that expense.
So we can get either their insurance or them.
Yes. Yes.
Now, obviously, your situation, there's a lot of different dynamics that can come to the table from your insurance claim and all of those factors. So it's not a cut and dry, always easy answer.
There's multiple insurance companies that share going to be each individual.
Yeah. You're all gonna point your finger at the other one saying, no, they gotta pay, right?
So Chris, you were asking that question about the difference between operational and reserves, and it seemingly be obvious. There's a gap there sometimes. So I would love a breakdown of that, of how exactly it becomes confusing sometimes for board members of what to use from what funds, from what accounts.
Yep. So the great example is large projects, right? Because your capital expenses like roof replacement, things of that nature, oftentimes you're planning for that, right? We're going to do 3 roofs next year. Okay, I can plan for that. But then it comes into play, okay, a tree fell on the roof. I wasn't planning for that. And so where do you cross the threshold over a large project? And when can I get into that and do, that type of thing versus I should have planned for it in my operating budget? And oftentimes if you have a reserve study, it actually says it in that study what that large amount threshold is. Frequently, that's depending on the size of your community, can be around $3,000 to $5,000. But there's a lot of nuances that come into that. Can I take a loan from my reserve and pay it back? That's a frequent question. There's a lot of times where people can confuse when it's appropriate to take the funds out of the reserve. And there is statutes in the IRS code about, hey, these are the things that qualify as a capital, improvement, things of that nature. And again, that's a far deeper dive of a conversation that I plan on having today. If you really want to know more about that, we can obviously have those conversations with you.
We are doing a reserve study as our next seminar too. So
I asked you about that.
yeah, second Wednesday, and that's actually a great. They work in tandem. This information, and then coming in, we have a reserve study expert that's going to come in, and they have an excellent product. Chris is a huge fan. A lot of our managers have used them before, and it's a very detailed process, but digestible. And I think you guys will really enjoy it.
Okay.
Correct. Yep. Second Wednesday.
Just a question on the subject. So on the portal, relative to the operation funds versus the reserve funds, is there anything that drills down to an educational section or a list of items for the board to know what falls under which category, or is that just the guidance that we get then from the community manager?
So I don't believe there's anything on the portal, at least not that jumps to my mind, but we do actually have a nice little chart that says, okay, it's kind of one of those flow charts. If yes, this, if no, then that.
Where's that?
Our managers have them, so you can just,
Okay.
So, I mean, I guess theoretically, guys throw it up there,
Okay. Yes.
Good thing it's
We'll
recorded.
send that flow chart in with the notes when you get the recording of this. I'll include that for you.
Wonderful, thank you.
You're welcome.
See, this is how we make it better. Team
I
effort.
like that.
All right, so a couple other items to look at here is, again, looking at those variances, and when you are reviewing them for tax purposes, are there certain things that you're looking at on those variances that you want to make sure you understand?
I mean, to be honest with you, like for tax purposes, the number one thing that we're checking for is, I'm not sure, like, how many people here that are, that have your communities have CDs, right? Have different investment accounts that, okay. So To be honest with you, for tax purposes, if you ever looked at your tax return, it's like 4 lines, right? It's income, expenses, but there's a very important other distinction in there about investment income, okay? Because really the only thing that the IRS can assess you tax on is that investment income if it exceeds a threshold of $100, okay? Now, generally what, what is common practice is that your total expenditures, we take a portion of those and apply it relative to your total income with, the interest, the CD income, and then your association dues. So when we're looking at these variances, we're really honestly more looking at it for what would a board member, what would a co-owner, what would they have questions about as to why that is so different, okay? And I think the variances are really more important for how you all prepare your budgets for the following year, okay? Because that's ultimately also how you decide what those association dues are going to be, okay?
All right. So when you look at here, at the top for the operating, you'll see the income, and then you'll see the expenses. And then at the end of the income statement, you're going to see this category of operating net totals. All right. This is an important thing that you should be looking at when you're reviewing your financials. And the reason I say that is you'll see your total expenses right above that. And you'll see that in the current period, they had 21,000 of actual and 19,000 budget. So you got about a $2,000 variance. And then year to date, there's about a $7,000 variance. Now, when in expenses, when it's in parentheses, that means you spent more than you were budgeting. So obviously, we've got more than expenses than we planned for. However, when you look at the net total here, we've got $37,000 in the positive. How could that happen? It's because your income, you brought in more than you anticipated. So while you spent more, you also collected more, right? And so the association, well, you're supposed to have a zero-based budget. Does anyone know what that means?
From your working years, you start literally with a blank piece of paper. You don't carry it over from last year. You just multiply up and down. You start it all over again. You look at everything.
Revenues equal expenses.
Bingo. As an association, your operating account income theoretically is supposed to match your expenses. So when you do your budget, there's going to be a $0 variance. Revenues match expense. However, the world we live in, rarely does that happen. Okay, so you as a board need to know where you are at financially. So when a manager comes to you and says, hey, we've got this expense, do you approve it? You know, well, we're underwater right now. We've spent way more than we have. Maybe we have to defer this. Or, hey, we've collected way more because we collected all these delinquent accounts. We've got this extra funds. We have surplus that we can use for it. So it's your fiduciary responsibility to have an understanding of where your community is at. And this is a good place to look and say, okay, because again, while you have all of these line items in your expenses, that puts together a whole pie, a whole piece. And so theoretically, okay, I have a mandatory repair. Something is structurally damaged, it's leaking. I can take from the annual flowers at the entrance, because we don't have to have flowers at the entrance to pay for this structural thing. So while you want to try to keep each of the line items in budget, you can move funds from those other things to pay what you have to. But looking at the total, you get an understanding of where you're at as a big macro level. Does that make sense? Any questions on that? Now, the reason I make this a distinction between the operating and the reserve funds is the reserve funds are different. So operating has to be zero-based. Reserves does not. So you'll frequently see on your income statement for your reserve account big differences. Sometimes, some years, you have this huge surplus of funds, and others, a huge loss. Does anyone know why?
Large projects have been completed. Or you had, I was asking before, you have a unexpected, unanticipated expense to talk about. And when we roofs got blown off buildings, and you need to somehow.
And on the other side, if you didn't have any of those expenses, your reserve income statement purely just shows the contributions going in, right? So very little to no expenses.
Wouldn't that be nice?
So if you didn't have your unforeseen expenses.
Wouldn't that be nice?
So.
Well, and in order for it typically to be a reserve expense, it's a long-lived item, right? And so your roofs are theoretically supposed to last you 20 years. So you're going to be saving 20 years for a huge expense. So there's going to be naturally times where you're building up your funds in your reserve account and then spend a lot. So for me, in my own house, I'm the guy who saves all this money, and then my wife goes and spends it, right? And so I get to build the mountain up, and then I watch it disappear. But that's how the reserve account is. You're naturally going to have years where you're going to have surpluses, and that is okay. That is natural. And in other years, it's huge deficit. And I get board members who are just get on the board and go, why are we $100,000 in the negative on our reserves? Well, all those roofs you see getting replaced, we saved up for that, and now we're paying for it.
Question.
Yep.
Would there be value in having a reserve account for long-term large projects such as roads and roofs and things like that? And then also a separate emergency package reserve?
So my initial answer would be no. And the reason I say that is because all of your reserve funds are reserve funds, right? So whether it's for these specific projects or this specific project, you don't have to have a separate bank account. I mean, I have one who they want to have a separate account for their side of the project. They want to put that money away and they don't want to touch it. We can do that, but at the end of the day, it's all one reserve account.
There are reasons, more psychological than
Correct.
anything else, because
Right.
I agree with you, reserve fund, it's all for the same broad purpose. But I think in some associations, politically, if you tell people, look, we have to kick in extra $50 a month.
Yes.
And so we're going to set that aside, and we're going to designate that that is going into the roof reserve account.
Mm-hmm.
So that they're sure that money is not going to get somehow used for
other
falling
reserve projects,
trees
right.
or, the other unanticipated.
Slide you pointed that out.
I would also say that's also probably, if you've had a reserve study done, that reserve study can also act as almost a supplemental, way to save those funds. If you only have the one reserve account, okay? And then your reserve study is done on those separate things of what needs to happen. The only thing obviously the reserve study may not account for is unforeseen, acts of, an act of God, right? That causing the, expense you were planning on where you got to repair roofs that were just put in 5 years ago, because now they all blown off and trees fell and things like that. So
To build off of what our amazing board president, treasurer, secretary, and
What's organized?
over here is the exception to that is if you have an additional assessment, right? And that additional assessment is earmarked for a specific project. So we are going to have additional assessment for a site. Then you should have a separate bank account for those funds so they're not intermingled. Or another one would be if you have an insurance loss, let's say a couple buildings burned down, you should be putting those proceeds in a separate account so that it's a clear separation and you're not spending the insurance funds on something else. So there are exceptions of when you should have separate accounts, but for general purposes, outside of those exceptions, it should be just one. All right. Any questions on the income statement? All right.
Chris, there is not an income statement, correct, that that combines it all together into one, correct? Okay, that's my thought, I just want to make sure.
No, because it's fund accounting, you keep them
Yep.
separate. Now, the next report that you're gonna be looking at, that is the key one you wanna look at, is going to be your balance sheet. Now, your assets are gonna be at the top here. It's gonna show your operating bank account, your reserve bank account, and then any other investments that are there. Now, depending on your association, you could have other accounts in there, like if you have an additional investment or, other investment items. But the key thing you want to be looking at there, and your manager should also assist you with this, is what's called the FDIC insurable limit. Does anyone know what that is?
$250,000
For what?
per bank, per entity.
For financial institution, correct. Now, there are some exceptions to that, but the intent is the federal government will insure your money up to a certain dollar amount if that bank were to close its doors. So you don't want to have any more than $250,000 in one institution. That counts if, let's say, you're operating annual reserve on one bank. You don't want to exceed that. Now, the workaround for that, and that even includes CDs, the workaround to that is a CDR. And that's where your bank takes your money and puts it in other financial institutions on your behalf. And now you're up to $1 million instead of $250,000. So there are workarounds, and we've got an amazing banking team that we work with. I think her name is Nicole. So if you ever need information on suggestions on how to, invest your funds, she's more than happy to come to a board meeting, have conversations, answer all those questions. She's phenomenal.
First Citizens Bank, yeah, he's great.
So, but that's one thing you want to look at is making sure your funds don't exceed those thresholds, right? The other is we try to put maturity dates on our investments. So when those CDs or investments mature, and we need to make a decision on what to do with those funds. Sometimes you can reinvest them. Sometimes you need to be able to look at your upcoming capital projects to make sure we have liquid funds available. Again, your manager can help you with those. But those are some things you want to make sure you look at. Okay. The next one that's on here that is a common question is, what is retained earnings? Not a balance sheet. Who understands what that means? I love crickets.
The answer, he's just trying to.
No. I'm trying to remember how I try to explain it to people, because it's not a thing. You can't go and
Your accumulated
profit loss over the years.
I love these gentlemen. They're amazing. So at the end of the day, an association is a business, and all the owners are shareholders in that business. And so what the retained earnings are is a record of your accumulation of your profits and losses since the formation of the association. So at the end of the day, what this is saying is, over however long this association's been in place, their operating account has profited $9,800.
But if somebody says, show me where that is,
It's not there.
it's a figure.
And keep in mind too, that figure there of the 9,800, and if we're going to combine operating and reserve, I like how they have these two columns. That 52,000, that is as of, so we're here in June 30th, 2023. That retained earnings number is as of January 1st of 2023. Okay, because your current year activity is taking place down there in the income line for net income. Okay, because your income is always going to close to your retained earnings on the last day of the year. Okay,
So that's a rolling updates annual.
correct. Yes. And then the other thing is, and I can't even think of one off the top of my head, anyone's here association had any debt, any outstanding loans. Beautiful. So because of that, okay, your retained earnings, if you were to look at your current retained earnings as of June 30th, you really want to look at the combination of net income and retained earnings. Your total equity is equal to the money you have in the bank because you have no debt. Okay. our bank accounts are our assets, okay? And our assets are equal to our liabilities and our equity. All right, but you guys have no liabilities, we have no debt, therefore assets equal equity, okay? But yeah, if you ever get questions on why that number is what it is, keep in mind that's as of the first day of that taxable year, okay? That reporting year, which for pretty much everyone, we've got a few associations that have like a June close year, but for the most part, they're all December 31st.
So it's really a number that's not gonna have any major impact on you for the most part,
Yeah,
but every once in a while, someone's like, what is this?
yeah. Like, I don't know, Chris, if you click in there, I know this is a presentation, but if this was a live version, you click in there, the only transactions that would appear would be every single year's closing entry from your net income to there. So, and in pretty much all accounting softwares, that's an automated entry that's done between the 31st of December and the 1st of January.
Typically, we see that in the report for the year.
Yep.
All right, so balance sheet's pretty simple compared to the income statement, but those are gonna be the two that you're really gonna look at every month, is those two reports. And again, if you want to see further breakdowns, you're gonna see that on the trial balance sheet. So those three reports are the three ones every board member, or at least the one who is gonna be advising the rest of the board members, whether it's the treasurer, however, they should all be looking at those on a monthly basis. All right, so hopefully checkbox number 2 done of what to look at and how. So the next part of this is taking all of that information you now have learned over the course of the year with your financials. What do you do with it? All right. Well, we're going to take that and combine with other information and create our annual budget. Now, my suggestion for most associations, let's assume you have a calendar year budget, you should be starting your budget in a very preliminary fashion in July. What I mean by that is you start looking at your upcoming year. What projects do we want to do for the coming year? A good tool for that is going to be a reserve study. What are we planning to do? Okay. And the reason I say start in July is because if you know what projects you want to do, you can actually start getting bids for those. And then when you actually sit down to do your budget, you've got actuals to work with, right? You've got real numbers that you can plug in there rather than, well, I think roofs are going to be $50,000, but I don't really know. You've actually got a concrete bid. And also when you're looking at your reserve studies, while it says we should start this project this year, based on, that the study could have been done 3 years ago, are we at the condition that we thought it needed to be? So evaluating the need and getting bids early can be very helpful. But then also sitting down and looking at the actual financials. And this is what he was referring to as, okay, what are the variances, right? And when I do a budget, there are 2 types of items that I am basing my review off of. One of them is called historical trend, and the other is going to be zero-based budgeting. They are exactly what they sound like. Historical trend is looking at generally a 3 to 5 year window and go, okay, what expenses have we incurred? Is there a pattern here? Can we project based on that? Example of the, example is your utilities, right? Every year we're spending this much on the water. If there's not really been any increases, we can probably project that it's going to be consistent with that, right? Obviously, you can check with your water department if there's going to be rate increases, but outside of that, that's something you can really look at as a historical trend.
I would also recommend too, like if you're looking at years and years of financial data, when you're doing these budgets, also see, do I have continuous variance, like negative variances every single year on the same item that haven't been taken care of the prior year, right? That'll also probably help you identify what may be one-time expenses or, wow, we seem to always under budget for our insurance every single year. Then that's something that needs your attention. Okay. Outside of, we have a tree removal variance this year. Okay. Well, that may have been a one-time expense that we're not foreseeing, and the historical data would also support that. hypothesis, okay?
A great example of that is I had a community that had, very large community, had very sensitive irrigation system, and they had a large budget for irrigation repairs. And every year they were over budget. And every year I sat down for the budget season, they're like, this year we're gonna do better. I'm like, what are you gonna do differently to do better?
It's not getting cheaper.
You know, like,
Get people to stop driving over the sprinklers.
That's a long guy.
I mean, I don't understand. But like, I'm gonna be, this is not a wish and a prayer thing. It has to be an actionable, you know, like example, printing costs, right? We spend, $1,000 in printing costs, and half of that is a newsletter. We're gonna convert to digital newsletters. We're no longer gonna print them. That is an actionable change that you can do and save money, right? So if you really want to save money, don't just have a wish, have a plan and figure out logistically how you're going to make that adjustment. Otherwise, you need to budget appropriately based on your spending trend. If you can change that spend, great. But have an actual plan, an actionable plan, and not just, we're going to do that.
I'll give you an example. Last year, as you mentioned, irrigation, water costs and all the rest of that. I observed that looking at the bills, obviously huge expense in some of us. We did not have any kind of rain sensors on the system. And I said, look, let's figure out what the cost is per unit per line. How many do we need? Now, how many days during the summer will it take when the sprinklers don't run to recoup that?
Right.
And so I did ran numbers on it, and I said, look, if we have 10 days from April through October that the sprinklers didn't go on, and we'll have paid for this system, and then also more than cover that cost.
Yeah.
And then it's just benefit them for the next 4 or 5 years until they need to replace.
Correct.
But that is an actionable thing that I think a lot of associations
Correct.
might overlook. And that is a way to trim back some of those costs.
There are legitimate ways to cut costs, save money, and your residents will love you, but I'm a huge proponent is have an actionable plan. If you're going to reduce a line item, be able to justify the change, right? And the other aspect that I look at is, at the end of the day, living in an association is like picking the lifestyle you want to live in, right? Because you can have a community that wants white glove service. And as long as everyone's willing to pay for white glove service, we can have a 0-inch threshold on our snow removal. Okay? As soon as that snowflake flies, they're out there spreading salt. Okay? But if you don't need that, and the residents are okay with shoveling a little bit themselves, you can cut that cost back and make adjustments to what your assessments are. So for me, I'm also a huge proponent because at the end of the day, you're an elected official representing the other residents, is soliciting their input. What do you guys think? As a collective group, what do you want? And over time, the demographic of the community can change. You could have younger people moving in that no longer want the digital newsletter, they want, a printed newsletter, they want a digital one, or you could have the age group going up and like, hey, we want more salt, we want our sidewalks clean, I can't shovel it myself, I can't do it myself. So talking to the residents, seeing what they want is a big thing. And there's a lot of ways you can do that. There's free surveys like SurveyMonkey, that you can send out and say, hey, and limit it to a couple items, like, what do you think? All right. And at the end of the day, you might not get a big response from it, but when you put a budget out and then someone comes up and says, why did you do this? I asked your opinion. Did you respond? That was your opportunity to give me input, right?
And I'll piggyback on that a little bit too, because it's as much as you want to listen to everybody in your communities, the residents, it's the same with the managers and the KS that we have when we hire managers, we train them, the expertise that we have in-house here, not just the managers, but then you're moving into having someone like Nick can see all these little nuances that sometimes when we give you advice or they give you advice as managers, it doesn't necessarily fit with your plan, but we're not just giving you that advice because we think it's fun or exciting. We actually are looking out for the best of your community. So it's like sometimes you can take a step back and think about it in the big picture, have your conversations, but it's hard. Change is hard. Sometimes it's like moving that to the next step is difficult, but you know, that relationship between your management company, between your residents, and between you as a board, if you can get on the same page, then things move forward in a really peaceful fashion, or as peaceful as it can be within an association.
Now, this, in that same light, is not a popular idea, but I will pitch it until I die, is most people have their budget meeting in a closed session meeting. I'm all about having an open session meeting. That way any resident can, they're not necessarily participating, but they can come in there and watch the meeting and they can understand how you made those decisions. Because they're gonna have to live with it too. And if they knew how you got to the decision, most of the time they realize, okay, that was a logical path that you followed. Okay, I don't like maybe the assessments went up, but I understand why.
And again, you're giving them an opportunity to have their.
So I'm a huge proponent of having open budget meetings. Not necessarily, I mean, you can have a schedule section where they can provide their input. In some states, it's actually mandatory to have an open budget meeting. Michigan is not that way, but I think transparency is far more superior than thinking people are sitting in some kind of closed dark room, smoking cigars, plotting against them, right? You know, because I've had that analogy thrown at me and I'm like, we're on the same team here, so.
One of the things in the same thing would be proactive and educating people, not just at budget time. I prepare a monthly treasury report that everybody has access to. It's part of our record for monthly meetings. And in there, I talk about what the trends are, the reason why we had variance in this area this month is due to this or that. And this is something we can do about it, or we can't do about it. It kind of does grease the skids a little bit so that when you come around to prepare the budget, people have been hearing about it, for the last year. I gauge the verbiage very carefully because it's always subject to changing conditions and what I'm sure the February not true in June. But I like to try to keep people educated as to what's happening.
Well, and I love the pay it forward, right? If you can communicate things that you know to residents and prep them for it, it's nothing better than sitting, say, at the annual meeting at the end of the year, and you're explaining things to the residents, and someone's like, why did that happen? And you don't have to answer because someone else in the audience goes, you didn't know?
Right, yeah, I love that
I'm like,
too.
oh man, I love you. It's a great feeling because you communicate with it and people know. They may not like it, but they know it and they get it. They understand how you got there, right? So when you're reviewing those financials, you want to be looking at the things that can change with actionable changes, things that might have been one-off, right? We had to pay this thing one time this year, or maybe it's something that happens every 3 years, like a backflow testing, right? It doesn't happen every year. Looking at those expenses and figure out what are the anomalies. Why is there that big variance this year that hasn't been in there for the historical trends? You go out and get, all right, my landscape contract expired this year. Let's get it renewed or go on a new contract, whatever we're going to do, get that contract in place so I have an actual number to work with. And so when you sit down for your budget, you've done all the work in advance. You already know what those numbers should be, what ones we're going to have to change. And unless you're a brand new community, this isn't going to be rocket science. You should have historical data to look at, your actual contracts to work with, and be able to come up with those numbers to get a relatively good idea for a budget. Now, some items you can zero out, like, hey, my landscape contract is the only thing going in this line item. I have a set contract, it is what it is, boom, this is the number. Others like building maintenance. What's gonna break next year?
Look at that
If only you
crystal
knew.
ball.
All right,
Which is why, like, I like how in some of these too, like, you have separate sub-accounts for your irrigation contract and then the repairs that are associated with that, okay? Theoretically, you should know obviously what that contract's gonna be. You should be spot on with that budget, unless maybe it's up for renewal, right, in the middle of the year. But the repairs, again, you're gonna go based off that historical data. And if you're gonna do something like rain sensors, which I would like to mention ever since you mentioned that, it started raining.
Right.
So thank you for that. So, but.
It rains before the cycle.
Exactly. But again, when you're looking at this, understand that some of these categories do have that separate designation for what those contract payments are monthly or quarterly, and also what the repairs may be in addition to that.
I'm a big proponent of having contracted services that, a separate line, right? But I'm also not a proponent of having 5,000 GL numbers unnecessarily, right? So one for shrub trimming, one for flower planting, one
One for tree
this,
trimming,
right?
one for bush trimming. one
Your
for-
financial report gets so long and
Right.
tedious that it's easy to make GL errors, right? So don't make it more complicated than it needs to be. For some of those items, you can create a general grounds maintenance and then look at the overall historical trends. When you're doing your budget, you can make some notes like, hey, this is what we typically pay for this or this or this, and have it all under one line item. You don't need to have, because I've seen some financials that came over that I'm like, there's 5 pages for a little HOA.
Yeah.
What are we doing?
And it makes it also appear intimidating too for your co-owners if they're looking at that income statement and it's 12 pages long.
But I've also seen the reverse, and I have one line item for maintenance.
Yes.
Yeah.
What goes in that? How do you plan, like,
Everything.
what do you see that, so I started separating out, like, we need to have a plumbing one, an electrical one, let's get the base one separated out, so we can see patterns, right? We can see, okay, our plumbing expenses are going through the roof, what's going on here? What can we proactively do to change to mitigate that going up, right? So having a balance between those is important. Another thing that most boards that I have to educate on this is they wear this badge that I kept the assessments the same year after year, and they feel that is a badge of honor that they should wear. But realistically, it's causing issues because costs go up. And if you don't do progressive increases to mirror that, you're going to get behind the 8 ball and you're going to have to do a far larger increase. And I've done charts for the board to show like what the difference is. If you do small increases over time, that money compounds. And even if it's like, hey, we're having to add some cushion to this line item, right? And over time, we can then narrow it down. But that having that extra money there doing those small increases means overall, the long term, your assessments end up being lower. And then there's charts that we can show you how to do this. But if you do these small increases over time, your long-term assessments are lower than if you wait and do big jumps. You have to play catch up. So that mentality, that badge that they like to wear, you're actually hurting yourself long term. So properly plan for inflation, properly look at things, and budget what they should be, not what you wish them to be.
Wish is a key word here. We have a lot of wishes.
Yeah. Any questions on my diatribe lecture?
Boxing is stepped out.
Yeah.
Any
I'll
questions
step
from the
back down.
chat or the virtual folks that are tuning in that we may have not seen?
Or Mike Miko's been tackling as we go.
Thomas was asked a question about creating a subledger for the reserve account.
Okay.
To kind of coincide with the reserve study, so.
Okay.
Just let him know, speak to his manager and then go to the accounting team to create a subledger.
Yeah, for sure.
All right.
Like, we can say, begin the budget process in July. You're assuming your
fiscal year begins when?
January calendar year.
Okay, if your fiscal year begins before January that year, then
Adjust accordingly.
Yes, yes, 6 months prior.
So 6 months before, so most, let's say your calendar year, most associations try to adopt their next year budget, say like October, sometime that way you can get your letter distributed out in November and people can plan accordingly, right? So that's why I'm saying if you're gonna adopt it in October, a couple months prior to that, start your research, getting the bids, all of the preparation in place. So when you sit down in October, you're prepared to have an informed discussion and decision. You've already approved the necessary contracts, not debatable, you know what those numbers are. You've already done your research on things, you know what's coming. You should be able to project based on projects we know are coming to some level of accuracy what the rest of the year could theoretically look like. Because if you're doing your due diligence, you've already decided what those capital projects are. They may not happen, but you've already got some motion going there. So you have an idea you can project the rest of the year. If you start in July planning for next year, you can get all the stuff in motion in place. So when you sit down at the table, you're prepared to make decisions. Make sense?
So if you guys can read this, how, if you all were to point out, let's say 1 or 2 things on, if you were sitting down in July doing this budget, let's pretend for a second that this is, captures a whole fiscal year. What are some of the large variances that you would either look to see, are these one-time expenses, or assuming it's not, how do you need to adjust that budget the following year?
Can you?
Unfortunately, I can't make it that much bigger. But the example right here is plumbing supplies and repairs. There's a $8,900 variance for plumbing supplies. I mean, when the overall expense is budgeted for 35, an $8,900 variance is a pretty large difference.
And then the large one too is that your elevator repairs and maintenance, you've overspent by $30,000 on that, which is more than 50% of what that cost was. So again, was there a catastrophic situation where there's a one-time expense that costs us 30 grand that caused us to go over that? Or is that just true repairs and maintenance on that we have to account for the next year's budget, or make an actionable plan as to, how we're going to not incur so many of these in the future? Okay.
Well, a great example is I was having a conversation with one of our managers with me, and the board was at their meeting going, man, we have a lot of drywall repairs come from roof leaks. How are we going to get ahead of this? And their plan is to replace their roofs over the next 10 years. And I'm like,
With the next 10 years.
all right, so let's put 2 and 2 together. Maybe we need to move that escalated up. And that would be one of those things that as you're reviewing the details you have, okay, our plan may need to pivot. And if you do that in advance, okay, we're going to do that. Let's talk to roofers. Let's get someone involved. If you're starting in July, you've got time to prep for those things, proactively plan for, and then when you sit down for budget, it goes, well, our reserve study said we were supposed to get this. We just hit us in the face. We got to pivot. This is what we need to do. And if you start it in advance, you can communicate it, and the residents can come along for the ride. Right. So as we've kind of been talking about in this, is just looking at both your operating. You should also have a reserve budget and be able to plan for those projects for next year. Because they're 2 separate items, realistically. We're looking at the things that you should be budgeting for. Do we need to do roofs? We've got a ton of roof leaks. Maybe we need to pivot. Okay, we're spending thousands of dollars on our irrigation system. Is there something we need to do different? How can we plan to cut back on these expenses? Not just keep throwing money at it, but what can we actually do?
So Chris, when I look at this, my biggest thing is I would ask, why don't we have a budgeted, a budget allocation for our reserve contributions, right? Has that not been factored into the budget of how much every single month we are going to transfer? And the answer may be no, right? But I feel like most communities, you guys would want to know how much are we going to be contributing to our reserves every single month? Okay, so in this particular instance, you know, you can see year to date, we have $700, you know, that's contributing, but you know, why isn't that factored in, okay, to our budget? Okay, because the budget line there is blank at this point.
That I don't understand because it's a legal requirement, it's 10%. Yeah, at least, minimum, yeah.
Yeah, but it may just not be listed on the financial statements, right? So that's something that, again, when I'm looking at these things, those are kind of where my eyeballs are drawn. Again, we're not gonna budget in for our, you know, our 43 cents of interest that we have coming from the operating account, right? But we want to budget in for those other items.
All right, so jumping ahead, there's kind of a list here of some of the items to kind of look at, but making sure you use your reserve study, looking at, you know, and comparing, are we in line, our assessment wise? Because again, I've had some communities that, hey, they're wearing that badge, you know, but every other association in the geographic area are $200 more for comparable things. Why are you so much lower? Are you prepared for the inevitable? Do you have a reserve study? Do you know how much you should be putting away? You know, prepare yourself for what and plan for what you should do.
So I love this mode. Even if you have a reserve study done, are you effectively using it as a tool to prepare your budgets and your allocations for your transfers into your reserves? Okay, because you know it's kind of like having a trust, right? You can go set up a trust, but if you don't fund the trust, then it's just basically a $3,000 piece of paper that means nothing, right? Same with the reserve study. If you don't use it as an actual tool in your budgeting, then the reserve study itself, you know, is essentially useless, right?
I know we are running to the end of our presentation, and Natalie's over here like, but, I'd like to open this up for any questions. I mean, obviously we've talked along the way. Are there any questions that anyone has about financials, budgeting?
And to all preface, like if you have a question that you may think is you know is sensitive or you know has any type of you know specific information about your community, feel free to either grab one of us afterwards, or I've got business cards back there. I'm sure Chris does as well. Email us, okay? Email us, call us if you guys have specific questions, even if you don't have them right here today, and it's anything that you want to discuss later. But by all means, the floor is yours. Is there anything that we didn't cover today you thought we may have? Yes, we have a hand raised.
Have you
If
considered,
you want to unmute yourself, Thomas, you can ask your question.
How often do you think a reserve study should be done?
3 to 5 years every year.
Okay.
So there isn't a statute in the state of Michigan that dictates that. However, I know there's one being proposed in legislation. However, Freddie Mae and Fannie Mae, yeah, lenders, the major lenders for FHA, right? They have stipulations. They want to see the data.
Is that also a requirement with the IRS or?
No, it's not an IRS requirement.
Okay.
So
It's one of those things that it is, in some states, it's mandatory. It's best practice because again, things change and, you know, the reserve study is 30 years. You know, are you really going to be able to keep to a financial plan for 30 years? I get to see one stay accurate for 5. So, it's, I mean, some, like the one company that's going to come in next month, actually give you a spreadsheet that you're able to customize so you can update it as things go and have actuals in your plan and adjust with you. So you've got a little more flexibility there, right? So in that situation, you could probably stretch it a little longer as long as you're following that plan. But the nice thing of having an updated study more frequently, if someone's coming out, a third party, you know, company that's going to look at something and assess it and go, okay, wow, these roofs held up far better than we thought. You can just start going, ooh, And you got way more concrete that failed all of a sudden for whatever reason. We need to help this, and they're doing the measurements, the quantities for you. I mean, if you've got a board member or someone who a volunteer wants to go out with a measuring stick and start measuring stuff, great. Otherwise, this is money well spent, in my opinion.
And it's on the 13th of next month, we'll have, building reserve out, and they'll go into all those details for you too, Larry, and explain it. We also have that as a resource on our website. We've had reserve study experts come in and present. So you could always go back and watch those videos if you're at that stage where you want to look at them or you want to review if you need them. There's great information too.
Well, they will meet with you as a board after it's complete. And you have an opportunity to ask all of your questions and they'll make the adjustments based on your requests as well.
Oh, no, it's okay to pay for a reserve study out of the reserve account. In the past, we're planning one next year, and I see it as part of the reserve, big picture. And I want to take it out of reserve, but again, operations are zero-based budget, and our association fees are really tied to that and so on, and, the reserve fund. Anyways, I want to use that as, where to take the money from.
What does our
So,
flow chart say?
I've seen it both ways, but they just recently updated the reserve study standards that say that they should put the reserve study in as an expense in the reserves.
Okay,
So,
because in the past,
to
it's always
me-
been out of operations.
Right. So I've seen it both ways, but what I just attended an education class, and they just said that, hey, they've updated the standards for reserve study specialists, that they need to include the reserve study cost as a projected future expense in the reserve.
Yeah, we're very behind the eight ball in our community. There has never been a reserve study done.
It's never
We're in the
bad time to
process
start.
now of working with our community manager and trying to get that done. It's gonna be a huge wake-up call for the residents.
Right.
Because,
Well, the reserve study isn't going to be that expensive. It's just gonna-
And honestly,
The downside of not doing it, to your point, is that in other states like in Florida, that's just the most rampant example. People are getting hit with millions or hundreds of thousands of dollars of special assessments because they didn't have.
and I was shocked here because I lived in Florida for 20 years in HOAs and you did not go without a reserve study. And so to come here and this community is an older one.
You're running
And-
naked. is
And
what you're
no,
doing.
it's
Concerning.
very.
and so like the conversations I've had with the people that do the reserve studies, a lot of times like they'll look at the age of the items that you may need in those reserves. And they also look at the industry trends to say, okay, a roof may cost, 50 grand right now. However, based on the age of your roof, you're going to need it in 5 years. The industry trends would suggest that by that time, it's going to be $65,000. And they have you plan for that.
Yeah.
Okay, because otherwise you're going to lose to inflation every single time if you don't need that item for 5 years.
Well, I've got a community that I'm working with right now that I saw what you're dealing with. The board agreed to do the reserve study at the community year. They got the numbers, had the sticker shock, went through it, realized, okay, it is what it is. And they started that communication with the residents now, so they could all adjust to what's forthcoming. And then when the budget actually comes out, it's not shocking.
Right. It's a different scenario. You look at, do you do a little bit in each month, every year? Or do you do a balance of partially funding and then with a big assessment, but it's all laid out so that everybody knows it's coming.
And again, to like look at the lifestyle that your community lives, and are there things that you may be spending money on that your community members, for lack of a better term, don't need or don't care about? You can then allocate those funds to then fund that reserve in addition.
I mean, if your plan is to borrow money, that's a bad plan.
Yeah.
Yeah, terrible.
I like you saying the lifestyle of your community though, because it is when you dive in, you may find some things that you can actually adjust that aren't as important. Maybe some, will have some growing pains with that adjustment, but if it's for the betterment of the entire community, then it makes a lot of sense.
Right.
We're here to make sense.
About how much does the reserve study cost, or it varies all over?
So it's gonna depend on the size of your community, the number of amenities you have, but you could probably project that it will be somewhere between $2,000 to $5,000. Again, the larger community, more amenities, the higher end versus the smaller with lower, be lower. But that's typically the range you do.
That's kind of a level two though. If you're starting out, if you've never had one, I think it'd be much higher.
Well,
That's sort of, we paid for, we've had several, so every so many years, we're at a level two, and they have the level three, which is nothing but you first off, because this, I really like it. It's really comprehensive. It's a good guide for planning and stuff, and the work they put into it. I would think, that's what I'm expecting for the level two, somewhere in that range. So I would think first off will be much higher. Maybe not that.
Well, we're gonna go into details on that next
Next
month.
week.
Yeah, we'll have all of that. I have somebody in that can explain the differences between like the beginning, middle, and the third time around, as you had said. So you guys know about the reserve study seminar that's coming up. I'm really happy that this has actually brought up that conversation. As a management company, we understand the importance of them, and we would like for every one of our communities to have that in place. So the closer we move to that, the better it is going to be for you to be able to manage your finances and to have a really great budget as well. I wouldn't be Natalie if I didn't say, please come to the expo. It's coming up in October. I'm super excited about it. We're doing brunch and mimosas. We will have conversations like this. It'll be like a short panel, but we're going to have our reserve experts at that expo. We're going to have Nick with his team there, and you can actually ask a lot of these questions, build relationships with the vendors that we have. We've worked with them for a very long time, and we're very proud to have them as people that we can trust. And that's part of our transparency as well. And then if you guys have any suggestions for this specifically, you can email me directly when you RSVP. If you want to send me an email, it'll come directly to me. Chris and Nick will be available as well. And, keep Nick in mind for your taxes as well. He's an Allen Park who takes care of all of that too. A marketing plug too.
Right, to Plymouth Grayling, if you're ever way the heck up there.
Right, yeah, there's
Plymouth
lots of
Grayling,
different
so,
locations. I want to say I appreciate both of you so much. Your wealth of knowledge is really enlightening and helps a lot. I hope that there was a lot that you could glean from this too. I know it's like a deep dive and sometimes
Yeah.
it can be a little bit boring, but you guys did an excellent job today.
Now, and honestly, we get a lot out of this through the interaction that you guys provide and the questions you provide. And you may leave here today and again have a question or something pops up, or the next time you're looking at, the next month's financials, you may think of a question based on the information you guys got here today. Again, please email, please ask questions, because we'll all be better off. So, okay.
Great. Thank you so much for being here.
All right.
Enjoy the rest of your evening,
Thank you,
everyone.